We've got an earnings alert on Applied Materials. Shares on the move after reporting results, down about 5%. Let's get to Josh Lipman, who has the details for us. Hi, Josh.
So, Courtney, Applied Materials, remember, heading into this report, trading right near its all-time highs, was up more than 80% this year, but now dropping here in the after hours. Q4 results missing on the bottom and the top. Q1 guidance also missed. I caught up with Patrick Ho over at Stifel. His take, Q4 gross margins came in above expectations, actually. So the company, he says, is executing well, but supply chain constraints impacting results here. His rating is a buy. Longer term, he says, AMAT very well positioned. After all, of course, they make the equipment to manufacture semiconductors. Patrick saying that's going to remain in strong demand across multiple end markets over multiple years. On the call, CEO Gary Dickerson saying demand for semis and semi equipment is very strong. The pandemic, he says, fueled consumption and big shifts. That continues. The problem is not demand, but there are supply chain constraints, which he said did worsen during the quarter, including delayed shipments from certain suppliers. Without that, he said, the Q4 revenue here would have been at least $300 million higher. He says these constraints are going to persist into fiscal 2022, but execs saying they are confident that situation will improve, and mitigating and managing these constraints, they say, is a top priority. Back to you all.
Thank you very much, Josh. Guy, I want to start with you. These supply chain worries, particularly in the chip space, do not seem to be abating anytime soon. How does that impact the way you're looking at AMAT here?
Yeah, and they're not going to abate anytime soon, in my opinion, but it's not going to change the way I look at AMAT. I mean, as Josh just mentioned, this stock had just made an all-time high at 159. You look at, listen, the quarter, I get it. They missed top bottom line. It's the guide that I think is concerning people in the first quarter. You take the midpoint of the EPS, it's about a 7% guide lower. But if you look at this stock on a chart, from April until recently, the stock was in this range, somewhere between 134 and 143. If you were to be so fortunate to get it back down to that 143 level, prior resistance becomes support. I think you buy this with both hands. Still an amazing story. I get what's going on here. The stock had been unabated to the upside. You buy that dip to 143 if you get it.
Karen, it's not at 143, about 151, but do you see opportunity in these after-hours moves for AMAT?
I don't really love to buy things in after-hours moves, to be honest. I like to hear the call because I think a lot of times there's some nuance with that you don't get from just looking at the numbers. You know, you want to hear how they do they sound confident? Are they wavering? So I don't really do much after hours. I probably wouldn't be an AMAT. Another one of guys that he loves, which is Qualcomm, which obviously is a little bit different business, but related, has just been on an absolute tear since, I guess it was mid-October as well. That one is a little more interesting to me, but that sort of 55% move up in the last 5 weeks gives me a little bit of pause.
Dan, I want to get your quick comments here on AMAT.
Yeah, I think the likelihood that these kind of issues abate sooner than expected, I think makes sense to me. I mean, look at how this stock had this early ramp here early in the year, and it's gone sideways here. So I think playing for this thing to actually persist longer than we expect deep into 2022 doesn't make a lot of sense to me, especially with valuation trading here. Dickerson, the CEO of this company, is a stud here. They're going to manage these supply chains well, and then when things come back, they're just going to have all that demand. So this one trades below a market multiple, below many of its peers, expected to have double-digit earnings and sales growth in 2022 with margins that were better than expected, both growth and operating margins. So they're obviously executing pretty well. I'm with Guy. If you see this thing at some point with 145 or something like that, I think it gets bought.